Hello guys, good morning. This is 12:39 a.m. Monday, 24th November 2025. The week ahead. A short-term Thanksgiving week in the US. We see official agencies continue releasing data that had been delayed by the federal government shutdown, right? So headlines by September, producer price, retail sales, and durable goods order. So key housing price measure and regional economic survey will also be published. Meanwhile, the UK Chancellor of the uh, Exchequer's Reeves will publish the long-awaited autumn budget, right? So elsewhere, Germany, France, and Italy will post preliminary November inflation figures and major leading indicators measuring business and consumers' confidence, while Canada and India will update their GDP and Reserve Bank of New Zealand will decide on rate policy. Now let's look at the weekly activity, right? I just gave out a summary of it. Yeah, so today be Monday, Japan. That'll be Japanese holiday, right? So no key economic activities today, right? Then on Tuesday will be German GDP, core retail sales month of month, right? On PPI, Producer Price Index, right? Then retail sales and consumers' confidence, right? So the key one here is going to be consumers' confidence, right? And on Wednesday, Reserve Bank of New Zealand will likely cut rate by 25 basis points, right? The autumn forecast statement. So this statement will be very important around Wednesday. The durable goods orders in charge of let's claim core PCE, right? Yeah. That Wednesday, that Thursday could be Thanksgiving. Then Friday as well. The Thanksgiving will see extend, but I think by 12 midday, that's when the Thanksgiving market will likely end. So the market volatility will likely end on Wednesday. So we're expecting Tuesday, Wednesday to be the economic activity for that will likely drive price for the week mainly, right? Yeah. So let's go over to the chart fundamental reasons why market will go in a particular direction, right? Now you might be surprised at why the dollar is still bullish despite rate cut, right? Yeah, the pricing for rate cut. The last week in last analysis we did, we saw that rate cuts have been priced in that there won't be a rate cut this year. It was priced in for January, right? But after what happened on Friday, right? After what happened last week, we saw that easing has grown to 69%. Why no change is there? So in essence, there are 69% likely they will likely cut rate, right? Follow me carefully. They will likely cut rate, and the price in for rate cut for December to be 25%. The last week it was the pricing they priced it out this year, and they priced it on January, right? But now they've priced it in again December. So we're expecting rate cut, right? Yeah, nevertheless, right? So let us give reasons. You can see that rate cut expectations for December sharply fell, right? That was before this data came up, right? That is now 69%, right? So that is that, right? I will show us something else, right? Then, even after Williams' softened tone, the probability is still not enough to weaken the dollar, right? So the dollar is bullish. That's what I'm trying to say, right? Yeah, the dollar is bullish, right? Yeah, and DSY just broke the 200 EMA, right? Yeah, dollar index just broke 200 EMA, which indicate that it's a strong bullish market, right? So the labor data, consumers' confidence will drive expectations, but this week calendar would change uh the Fed stance will change the Fed stance, right? Yeah, so it's not change anything, right? So risk sentiment is shaky, right? Japan China tension, US UK budget and weak global data. So these are the things that will likely make the dollar to be more bullish, right? Now, the only way that the dollar will be bearish, so let's just see, I kept it here, right? Yeah, the way that the dollar, if, say rate cut probability rising by 69% doesn't weaken the dollar fundamentally, but not enough to deepen the weekly bias to be bearish, right? Because one, the dollar structure is still bullish, yeah, because of trade EMA and the market. If you look at dollar index rose to I think the highest it has risen. Let's go back to the dollar index and see the highest it has risen since I think since no this is let me see since August, right? Yeah, if you look at look at the highest the level, right? August, which August was when it got to this high, right? Yeah, August. No, that was in November. This is the interest rate. Still November, what August, that was where it got to this high. But though the dollar is bullish per se, right? I'm just trying to tell us why I've said it because if you look at that Fed rate watch too, it says they are cutting, and whenever they're pricing for rate cut like that, we expect the dollar to fall. But that alone is not enough for the dollar to weaken. That is what I'm trying to say. That's why the further detail on this, right? Yeah, so dollar structure is still bullish. So market already expected the rate cut. That's one thing. So market has already expected the rate cut, so, right? So they have already priced in for the rate cut. That is why, you know this whole rate cut will not affect it. So safe haven flows to support the dollar. I will go to that, right? So if you look at the Bains, you look at the value index, you can see that value index currently is at 21. So let me go to long time before you see it properly, right? It's currently going at 21. So below 20 is safe haven, right? Above below 20 is a normal market. When anything above 20 is still on the safe haven as well. So the dollar is still playing as a safe haven. That is what I was trying to tell us. So that's the plan. Safe haven. So no major data early early week. So no major data. So the major data is mainly in the midweek, which is on Wednesday, right? Yeah. So dollar index shows deep buy strength now. So now let's go to this. If you look at so let me look at this for the EMA. So I would likely rotate this off because we already know that the dollar is bullish, right? So a pullback may begin only if price comes to 99.6, right? Yeah, 99.6, right? So we're looking at 99.6. Alright. So if price comes here, okay, we'll likely have that's the only pullback is trying to tell us, right? Yeah, if price dip all the way to this level, then we might likely look for a way to buy. Now, let me okay, just a minute. I thought I had the 200 EMAs on. Okay, just a minute. So you can see that price has already traded above the 20 EMA. So technically, the dollar is on the uptrend, and fundamentally, the dollar is still on an uptrend, right? Yeah. So, thought this really happened. So for me, when I did my analysis last week, right? Yeah, I did though that. So this was within my group, right? Yeah, I was able to like, okay, price really coming for a buy. Then if it breaks above this high, I'll likely wait for it to break above this high, then retest, then would likely buy the dollar, right? Until until price gets here. So we're looking at on the dollar to get here before we might likely, see if it will break that level or if sorry, or if any fundamental reasons for the dollar to go down. But for now, there is none, right? Yeah, so dollar is bullish. So for me, I'm still very, very, very much bullish on the dollar. Now let's go to gold, right? Yeah. So despite this whole thing, gold is still going to be bullish, right? Yeah, gold is going to be bullish. So nothing changed that, right? Nothing going to change gold from being bullish, right? Now look at it. Say dollar index is rising, but gold is still not falling, right? Because this is a sign of safe haven hedge, right? Yeah, because gold is used to as a hedge against inflation and it's also is a safe haven commodity, right? Yeah. So Japan China tension, right? Plus UK budget risk weakens global data. And they support the inflow of cash into gold, right? So gold now positively correlated with JPY and negatively with global risk, right? Yeah, so gold is bullish, right? Yeah, so I think gold is bullish because there's inflow of money of sources into gold because of global tension, global risk, right? Yeah, UK budget risk, weak Japan China tension. So that is what it is. So gold is still going to be bullish. Yeah. So I still going to be bullish on this. So this level is still valid, right? Yeah. Should gold come down or come down to this level, then we can easily, yeah. So this level is still valid. Yeah. This one is also valid, right? Yeah. So if they move to this level, we can buy the gold further. And also this level is also valid too. These are various levels gold can come, then I think will likely take price all the way to the upside. Yeah. Yeah, but gold is still bullish. That is what I'm trying to say. Gold is still bullish, right? Yeah. So if gold comes here, fine. If it doesn't come, I think um yeah, so but gold is bullish, right? Yeah, so that is that. Then JPY. Now the JPY is somehow complicated because the paper is bearish, right? Paper is bearish. So I will let me speak on the intervention, right? Yeah, I think I have that on here. So you can see that Japan JPY is bearish, right? The yen is bearish, right? If you look at the analysis I posted within the group and I posted recently that we have been on the sell of the yen, right? Yeah, let me go to yen index. You see for yourself. You can see, right? Yeah, at this point we're likely expecting intervention, right? So what is currency intervention? Intervention is when a currency has fallen to the downside, right? And then the country uses the dollar reserve they have to buy back the currency. So intervention is what we're expecting, right? If you look at the group I posted on the Telegram group, that they'll let it bring be will let it experience intervention. So that is what we have been expecting, right? So for me, I'm expecting intervention very soon, right? And I will tell us. So we can see that this is the Prime Minister of Japan, right? Takeshi to be proactive with yen's intervention, panelist says, right? So, like I said, we're expecting intervention. So, a government panel member said Japan is open to intervening in the currency market to mitigate the side effects of the weakened yen. I just talked about it that because of the fall of the yen, right? So they will likely intervene. And when they intervene, you see Japanese yen will just shoot up all the way to this high. Yes, it will just shoot all the way. Sorry, it will just shoot all the way to this high like this, right? Yeah, so they are buying back the yen with the dollar reserve they have in their currency, in their reserve, right? Yeah, so they'll likely you see the dollar will just go all the way to this high. Then after getting to this high, then it will likely drop again, right? Yeah. So it's going to take time. So they're trying to do so if you look at the JPY index, Japanese yen, you will likely see that we're expecting intervention. So let's go back to this what we were reading before, right? Yeah, say the nation's administration will intervene more actively in the foreign exchange market, according to Takuji Aida, right? Who is also the chief economist at Credit Agricole, right? So Aida said authorities could step into the market currency moves, if currency move because becomes sharp. So sorry, if currency moves become sharp and the administration will look to balance steady economic growth with effort to balance inflation, right? So that's one thing. So that's one. So this news, this one came in 23, which is yesterday. Why this one came in on Friday, right? So you can see that five charts show pressure ramping up on Japan's bond and yen, right? Japanese yen. You can see that the Japanese market had a turbulent week due to fear sparked by Prime Minister's Takeshi large spending plans, right? So pressuring the yen and the government bond. So longer data government bond yields reached their highest in more than 2 decades, right? So though that is not more important, but this one is more important, right? So this intervention. So if you look at the group, I posted that we're expecting intervention very soon because whenever the currency dropped to 160, right? No, yeah, if I will, no, I will take this off to show us from the chart, right? So BOJ remains last ultra dovish bank, right? Yeah, so they're not talking about dovish today. They should be talking about hawkish, right? Yeah. So, but for now, due to the prime minister's position, they are not going hawkish anywhere from now, right? So yen is still tied to the US yields, right? More than Japanese yield. So intervention talks may cause short-term spike, but no real policy change. Yeah, yeah. So the spike might be a short term, right? But the policy change. So you can see that short term volatile occasionally sharping yen, right? Yeah, due to verbal trade, right? So you can see it, right? So let me take this off. And so for the intervention, the bearish still bearish towards 157 and 158 unless re-intervention occurs. If price gets to 160, right? Yeah, so we might expect the re-intervention. So, right. If price gets to 160, let me show us this benchmark here, 160, right? If price gets here, for instance, if the yen falls up to 160, the intervention might just drop like this. Might drop very fast. Yeah. So please, when you're trading yen this week, please, any yen pair you are trading this week, please set stop loss. It's very, I'm telling you the truth because I've traded intervention more than four times, more than four times. Yes, more than four times, and it's crazy. I'm telling you, and it's also very profitable to trade. So I'm looking forward to intervention. Honestly, I'm looking forward to it. For me, this is a very good deal, right? But also, so immediately they buy back the yen with dollar. You see that the USD pair will just drop, and every other yen pair will start to will sell off immediately, right? That is what it does. Therefore, the GBP is still GBP is bearish, right? Yeah, GBP is bearish, right? So the UK budget November 26 is a major political fiscal risk, right? So the UK budget November 26, which is November 26 should be on Wednesday. Yeah, on Wednesday. I'm looking at this data you're seeing here. Oh, just a minute. Why is this doing like this? All right. So on Wednesday, GBP autumn forecast statement. So from this statement, that's where we'll likely get the political fiscal risk, but the UK budget, right? Yeah. So market doubts risks can tighten the fiscal risk, right, without political fallout, right? Yeah, so sterling correction to yield has faded, leaving it vulnerable to the US uh, dollar strength, right? Yeah, so consider, see, as dollar is going up, yen will be weak, right? So that's what it is. So price action is weak. So no daily close above the previous day high for six straight sessions. So the pound is weak, right? So technically we should look for a way to sell the pound, right? Yeah. So for me, when our price comes here, I think we should look to sell the pound. Yeah. Sorry. We should look to sell the pound. So I'm looking at these levels, right? Yeah, I'm looking at this level. If market trades are always high, then I look forward to sell it to sell GBP, right? Euro is still the same. Euro is still bearish as well, right? Yeah, for me, Euro is still bearish. So it says rate sensitivity is collapsing. Euro has no catalyst. So correlation to yield almost zero. So Euro has no catalyst for bullish rally, a bullish move or rally, right? So data is extremely light, and nothing to support the currency. Using inflation expectations still elevated, so ECB cannot ease. They're not talking about easy, but dollar strength is what is dominating everything. So technical structure is weak, right? So you can see that ECB and euro is weak, right? So, but if there is any levels, so let me look out for H4 and lower time frame levels to retracement for a sell. Okay. So for me, I'll look out for price push into the zone before selling the euro, right? Yeah. And if what is this? Why is this moving like this? Sorry. And if price break this low, right? I will wait for it to tap into this zone again, then I'll sell. That is how I'm going to follow it up, right? Yeah. So this is what I'm looking at for euro. So euro is bearish. So surprisingly, card card is bullish. Yeah, but not against the dollar, right? Yeah. So uh, card is bullish. Card is bearish. Two reasons, right? Why is it bearish? Because GDP expected weak, right? So the third quarter GDP are expected to be weak. So third quarter rebound only 0.5% after contraction. So Bank of Canada is seen on holding on till first quarter 2026, right? Offering no support. So correlation with dollar yield and DSY is weak, right? Yeah. So I think for USD card, I think it can be bullish. Yeah, card cannot benefit from the US dollar pullback, right? So USD card momentum remains strong, bullish to the upside, right? So why is card also bias is still bullish towards this, right? Yeah, so dollar is still bullish, right? But card itself is bearish, right? Yeah, card is bearish, but USD card is bullish. So take note, USD card is bullish. So let's see what we have. Okay, so this analysis I did within the week, right? Yeah, in my own group, and price really play out well. Went up, retested, and the move, right? So price might kick off. My price might start to pick up from here. So it's just what we're expecting. The Aussie, before we call it a day, Aussie. Everything against the dollar right now they're bearish, right? Every major pairs that are base currency, right? They are bearish, right? So bearish, right? Short-term CPI rising, but Reserve Bank of Australia firms on hold. So they're holding, right? Yeah, so commodity correlation strengthening, right? But global risk sentiment is soft. So right now, now there's a global risk, right? So that's why the dollar is still getting stronger, right? The dollar is stronger and gold is still stronger, right? Yeah, AUD just made a 3 months low. So recovery attempt is keeping falling at 200 EM, right? So it's bearish, right? So all the major pairs against the dollar they are bearish. So that's just the notch, including Kiwi, right? Yeah, Kiwi is still bearish, right? Yeah, so it's still bearish. So for me, I'll likely look for okay. Let me see this. Let me go to H2. Let's get the level for us. Okay, price my. Oh, yeah, I think I'm maximizing on this one. Yeah, so for me, let's see price get here. So the H1 is still valid. This level I mark within the week, right? Still valid, right? So price gets here. I think we may likely sell the Kiwi, right? Then let me go to Aussie. Okay, this level is still valid, right? If let's see if this level or here might likely be valid. So this place might also be valid too. Yeah, let us not underestimate this level. This place might this. What is happening? So this place might be valid as well, right? Yeah, so that is it. So in this week, for this week, we have bullish dollar, bullish gold, for JPY bearish, but intervention might come in, so be careful. So GBP, USD bearish, Euro USD bearish, USD card bullish, Aussie bearish, Kiwi bearish. Let me say that again. Dollar is bullish, right? That means gold is bullish, USJPY is bearish, but intervention might come in, like I said. GBP USD bearish, Euro USD bearish, USD card bullish, Aussie bearish, Kiwi bearish. Then for USD CHF will be bullish. Yeah, we're bullish, right? USD we're bullish. So this level is still very, very valid. So price comes here, I think we can have to pick it up. Yeah. And mind you, if intervention affects JPY, it will affect all the major pairs. No, it's especially all the yen pairs, right? So since these are like this, until intervention happens, we might not trade the yen pairs. So for me, I'm going to focus more I'm going to wait until I see an intervention before if I would likely trade it, I will let you know, right? Yeah. So let's just see how it goes, right? Yeah. So that's it for me this week. Have a lovely week ahead. Uh, thank you.